We'll start with Snap. That stock falling in the after hours, down double digits in terms of a percent loss. And this is after we saw earnings miss expectations. So a loss of $2.31 a share. The expectation was for a loss of 19 cents. Revenues also missing expectations, coming in at about 150 million. And we know the revenue estimate was 158 million.
Right, so misses on both the top and the bottom line pretty significantly there in terms of the margins. And we are looking, though, at a gain in the number of daily active users on its platform, gaining about 8 million, I think, over the year to 166 million daily active users. And we know that Snap is the company that has pioneered this idea of daily active users, whereas Twitter and Facebook had traditionally always talked about their monthly active users. This is how Snap wants to differentiate itself. In about 6 minutes here, they'll have their first ever earnings call. We'll see what kind of tone they set on that earnings call and explain why the losses were so much bigger than what was expected, because I think most analysts were expecting a miss, but not by this big a margin.
Right, and so that 8 million in terms of additional new daily active users, that is from last quarter, so from the fourth quarter. And so you see about a 5% increase there. Average revenue per user, though, falling on a quarter-over-quarter basis, down 14%, and that average revenue per user coming in at 90 cents a share. And so all of these factors combined, and then of course, what we hear on the earnings call is what investors will be looking at. But so far, the stock down at one point almost 20%, now down 18% after hours.
That's right. And then sometimes we talk about both year-over-year growth and quarter-over-quarter. So sometimes investors react to growth or decline in one direction or the other. In terms of that ARPU number, while it decreased quarter-over-quarter by 14%, it was actually an increase by 181% year-over-year. So depending on how you look at it, you could say Snap is still growing its business year-over-year, but it's still a decline consecutively in terms of the time frame.
And two, for earnings, we should say this company, we knew a big weight in this particular quarter was going to be that huge stock compensation payout to the tune of almost around $1 billion or so for Evan Spiegel when the company went public. And so you see that weighing on results in this quarter. Many people were expecting that, and so that was baked into expectations. But again, we will wait to see if we hear from Spiegel himself on this call.
Absolutely.
Thanks for watching Cheddar on YouTube. If you want to see more of our videos, click on one of these over here and be sure to subscribe to our channel right down here.